We're moving into the early afternoon on Wall Street, and it's time for another quick reset. I'm Grant Mercer, this is Storm Stock Solutions, and we're here to keep some clarity through the chaos as the day develops. The overarching backdrop hasn't changed much in the last hour. The market is still digesting that recent Fed rate cut, and the idea, highlighted by MarketWatch, that this may be the last cut for a while. That keeps the focus squarely on how long policy stays on this plateau, and what it means for borrowing, housing, and corporate financing. For equities, it's more of a hold-the-line macro story than a brand-new catalyst in the middle of today's session. Where we are seeing real movement is around technology and AI. According to reporting from MarketWatch, Disney is making what executives describe as a dramatic shift in its AI strategy, putting $1 billion into OpenAI and striking a deal that lets fans create short videos using Disney characters. That's a significant bet on AI-driven content and engagement from a legacy media giant. Traders are watching to see whether the market rewards this kind of IP plus AI joint venture, especially on a day when the rest of the AI complex is showing some cracks. On the risk side, those cracks are coming from enterprise tech. MarketWatch reports that Oracle shares dropped about 14% this morning, and that slide has rippled out to names like Nvidia and other AI beneficiaries. The concern here is whether big tech's huge AI spending plans are sustainable at the pace investors have been pricing in. When you see a big established software and cloud player stumble, it raises questions about how much of the AI boom is already in expectations. This whole complex is an area to handle with care as we head into the back half of the session. In the background, there's still plenty of thematic action. A MarketWatch piece on quantum computing highlights an analyst who sees a potential $205 billion market within a decade, pointing to companies like IonQ, Rigetti, and D-Wave, but with a big asterisk that revenue will be lumpy, and that patience is required. That's classic frontier tech behavior. Big vision, long runway, and lots of volatility. Healthcare remains a policy story to watch as well. MarketWatch notes that failed Senate votes around the Affordable Care Act mean key Obamacare subsidies may be allowed to expire, which could push healthcare costs higher for a broad swath of consumers. Professionals will be tracking how that debate filters into managed care stocks, hospital systems, and insurers as more details emerge. Even if it's not the intraday driver right this minute. Away from the tickers, there are a couple of under-the-radar personal finance stories shaping sentiment. One new survey, cited by MarketWatch, finds that about 72% of people say they'd be happier if they saved or invested more money, while far fewer think more spending would boost their happiness. That hints at a mindset that's more focused on building cushions and long-term security than on consumption, something that, over time, can influence flows into savings and investment product. And then there's a human angle piece from MarketWatch using Philip Rivers's unretirement at age 44 as a lens on a broader trend. More retirees and even early retirement, FIRE types coming back to work, often for reasons that aren't purely financial. For long-term market participants, that speaks to the evolving nature of retirement planning and how people think about work, income, and investing later in life. Into the next hour, I'll be watching whether the AI and enterprise tech weakness stabilizes or widens, how Disney trades as investors digest that billion-dollar OpenAI bet, and whether the relatively calm macro backdrop holds ahead of the closing bell. We'll wrap it all up for you in the regular close later today. Remember, this is information and education, not personalized financial advice. And as always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,